All right, we're live. This is CryptoVince. Hi, Lisa. How's it going?
Hey, good, thanks. How are you?
So I'm gonna share the link, and people will start to connect here. There we go. And then let's see whoever joins start to ask questions. In the meanwhile, while we wait, we can start to talk about the situation at the moment. Let's see if I got everything set up here. Yeah, so we're all good. Well, we're waiting for this BTC to do something. Where do you think it's gonna go? What's your
Been waiting for a
what,
very long time.
what does your gut say?
Watching paint dry.
What does your gut say? What's your bias? But bias? How you say it? What does your bias says about BTC?
I don't have a bias. It's a symmetrical triangle. Actually, at the moment, looking at what you just posted, it's since I've got an echo from you.
Do you have headphones?
No.
Yeah, if you have headphones, that would be better. Because it comes from the speakers, from your speakers, I guess. Is it bad?
It stopped there. I was even hearing you twice. Yeah, I'm hearing everything twice now.
Let me see if I can drop this one. Okay. What about now? Hello? Try.
No, I'm still hearing twice.
Yeah, so it should be your headphone, because if it comes from the speaker, then it goes in your microphone, and then goes again, I guess. I lowered my volume here. Try to lower a bit your volume. Okay. Okay, I got it. Yep.
Yeah, it's just a symmetrical way. From what you me, I'm switching off of you know. But if you were looking at the
Oh yeah, the Bitfinex chart. So you think that's a healthy break, or because all the FUD that was caused by Tether, all the shit that happened? What do you think about that?
I'm a bit out causing that. Some of that was because random guy. I mean, how much you're actually reading that stuff? You hear about market have no impact at all. It's the institutional traders that decide the direction. So for this entire candle to be that, I don't believe. For some of the spike, perhaps, I'm not sure. And like I say, I'm not hugely experienced in these things, so I don't know. But I find it very hard to believe like institutional large traders are going to leap in panicking about Binance getting rid of Tether because of some random guy on Twitter. But that's my personal view.
Let's just check for a second if they can hear you. Hey Andrew, hopefully. What's up? Because your microphone on OBS, your line was not going up. Now it's showing something. Hopefully they hear you. So So 6 watching. We're not alone. Better than the other day that I was talking with myself for 4 hours. Andrew, who's that's Johnny Bravo.
Yes.
Softer than Lisa. I'm softer than Lisa. I know she's a tough girl. I'm
I think he means your voice, which is kind of weird since I'm
yeah.
talking through
No,
you.
yeah,
But
because I have two
medium.
I have two mixers here on OBS. So I gotta just drop your volume a bit.
Okay.
What about now? Is it a little bit better? Elisa, say something.
We can compare.
So
Andre has a comparison.
yeah, so the Bitfinex chart is like crazy different than all the other one. Wow, so different. It's insane. I mean, linear log, whatever, for sure changes a bit. But yeah, look at this spike that happens here. It's way over the symmetrical triangle compared to Bitmax. Bitmax that it's like still in. Like it's such a massive change. And, most of the people they really go with the highest volume in the exchange, but Bitmax is more a margin trade, so regarding that I don't know really what to trust, because Bitfinex has lots of volume too, right?
Well, Bitfinex, it used to be the highest volume, and I actually haven't looked for a while, but I suspect Binance is probably higher now. But either way, Tether is higher than US dollars volume. So I think we can have a look.
Guys, you're welcome to make any questions regarding the video that we made while we speak about BTC. If you have any specific questions regarding the technical analysis, we'll be happy to answer the doubt. Doubt? That's how you say? All the doubt. Okay, exchange by volume. Oh no, I gotta go to BTC. Bitcoin markets. So BitMEX, BitHub, and Binance.
Well, BitMEX and BitThumb they exclude because they're yeah. Well,
I don't
BitMEX
understand.
exclude
Yeah.
because it's derivatives because it's not actually BTC trading. BitThumb, I'm not sure that's excluded there. You can see by the 2 asterisks next to it. Is also excluded presumably because it's Korean won, I think it is. And then Binance, yeah. Where's Bitfinex? Bitfinex even on there?
Bitfinex. Oh, 26.
Wow.
Wow.
So that's dropped off a lot.
It's crazy. Like, I don't understand the coin market cap because, I mean, how often they update the price? Because that's not the price on Binance right now. 6.4, is it? 6.4. Like, it should be 6.4. USDT Binance. Oh, that's USDT, which is 6.593. And
yeah, I suppose there's probably some lag between them updating it.
Yeah.
There's not
too much discrepancy between Binance and BitMEX now, when there was like 6.9 and 6.4 the other day, right?
Yeah, I think it's still sort of 6. Or last I looked, it was 63.50 on BitMEX, I think on Bitfinex.
So the highest in USD is this one right now, just 14 million.
My preference is limited volume, and it's also when I'm looking at the chart deals, they do seem to have a massive impact. So that's the one I've always found most interesting. But there's been the last couple of weeks that we've had this difference between Tether and US dollars.
So when you talk, your microphone goes off a little bit. I think it's the connection, though. It's not the microphone itself. Okay,
Quiet.
quiet in here. So Johnny, you missed the live show. I mean, everyone pretty much missed it because I was running on an outage of Telegram. So, so you might have lots of questions for me, right? For us, actually. So you're free to ask any question regarding TA that you wanna ask, because I have lots of members that privately contact me every day asking questions. Watch the video, Lisa, send it to me. So it was all clear to you? Whatever we presented? Oh, that video was like crazy because I was so bored. I had no idea. Talking with myself. Well, you know what? Watch the video. We can discuss a little bit about that indicator that you like. Huh? ADX? Is ADX?
Yeah.
Which one do you use?
ADX, yes.
With the DI? This is the most common one?
Yeah, I use the DMI, the Directional Movement Index.
Oh, DMI. DMI. Okay.
Have you gone back to your other screen?
Which is pretty much the same. What do you say? Sorry?
Yeah, because I can only see coin market cap.
Oh. Go back to Hangout. Let me just close this. Application. Share. I don't know, it just disappear. You see my screen now?
No.
Present to everyone. What about now?
Cap.
You see now? Hello? Can you hear me?
You see that? Yes.
Oh, sorry.
Oh, sorry.
There's some I guess some problem with connection because sometimes you cut it off. Could you review BTC today? Yeah, watch it in sections. Could review BTC today? Hide. Hide. I'm just trying to like figure out this call here. Elisa, can you hear me?
Yeah, I hear you.
Okay.
Um,
Okay, so they want us to review BTC a little bit. I mean, we talk about the last part of BTC, and we know what it's doing. I mean, depending on what chart you're looking at. If we look at Bitstamp, you can have a quick look at what's happening right now. We're looking at some kind of falling wedge, and if we take literally Fibonacci from the base of this spike here to the top of the spike, right there, we see that it's making like a sideways move, bouncing on this 61%. This is based on Bitstamp. Bitstamp volume is not the greatest here. Bitstamp is 221, so it's not really a good chart to take in consideration because the volume is not very big. If you consider Bitfinex, With Phoenix, it's even more on an incline. You guys can see the falling wedge a little bit better here. And would you skip this spike, right, Elisa, to consider the wedge?
Yeah, I think it's very tough to chart at the moment. But yes, I had a wedge drawn there last night, and then from the bottom from around the 11th, 12th up now.
Like
I
that.
did cut through a couple of wicks on that.
Mm.
No, back from the 11th or 12th.
Higher? Oh, from here probably, right?
No, from the 11th. Look at the dates. The bottom.
Oh, oh, okay. Oh, you just tracing this support like that
Hmm.
on a linear scale. We are. And would you trace the resistance just from those weeks, right? Not considering this one?
No, yeah, not considering the highest one. Not.
So this is Bitfinex chart. So again, the really small time frames, in my opinion, don't really help too much because there is lots of shit that happens when you know we look at 15-minute chart, 30-minute chart. So yes, for sure we can consider those time frames and make an assumption that this uh, little pattern might break up. But again, we have seen what had happened before. It's a chart that has been going like up and down, up and down, up and down the last in the last month and so full of manipulation, full of FUD, FOMO, everything is happening right now. So making a consideration based on just the time frame is not gonna help us to have a long-term prediction. While if we consider the one-day chart, we know it's in this symmetrical triangle, and we're just waiting for it to break in one direction to make a really better decision. Right now, we're just trying to trade altcoin market because when BTC goes sideways, that's what we do because altcoins can pop up while BTC is chilling. So in this little pattern right here, it's not the best falling wedge we ever seen because there is this massive wick, but considering considering it's just dropping to even below 78 right now. So would you consider this as a bullish or bearish if we consider just this pattern, Elisa?
To me, it's ranging. Like it's not to be defined as a falling wedge or a triangle or a pennant or any of those sorts of patterns. The price action needs to travel from one side of it to the other repeatedly, which is why also we say that you can't have 2 points making a trend line. 2 points is just a line, and 3 points is a trend line. So yeah, to say it's a pattern and it's going to break out because of that pattern at this point, no. That's why I like the trend line at the bottom, even though it's only 2 points. Although if you cut some of those wicks off, you can make it stronger.
Yeah.
Yeah, that one to me is stronger than either of them in the so-called wedge.
So it would be cool to be looking at this support here. See what happened.
I think so. If it doesn't break out, then.
So this, of course, in the if it doesn't break out here, I guess let's remove those. So let's see if
go out to 4 hour.
What do you
You
say?
can see if you go out, zoom out to the 4 hour, and you can at least see that it's just ranging. And I think people always want to get our opinion on what direction it's going in, but it's not showing any particular direction. It is ranging between what around the 62 mark and the 65 mark. Well, depending on which exchange you're on.
Yeah.
Higher for bit. But, that's a ranging price, and you can see it in the indicators. They're all in the middle. Everything's neutral. To make a call on whether it's going to go up and down to me is absurd at this point. It's a symmetrical triangle. It's
Yeah.
hasn't got higher threat.
Yeah,
Hasn't.
there is lots of things. I mean, we could even see this as a triangle here. They broke down in the short term. This little triangle that broke, went down, and now it's kind of retesting either this resistance, and could be retesting the 78 Fibonacci to touch and drop even more. So we're not either bullish or bearish. We cannot really make any assumption at this level, because the things are what they are. Indicators, I mean, indicator of 4 hours, MACD is not bad. This point, he reached below zero, and he's trying to curve. But we know MACD, it's pretty a lag indicator, being a moving average. So we can just assume that this will follow a nice curve up. But again, we cannot really tell too much. Let's see RSI what it's doing.
Also, if you pull that fib down to the next wick.
Okay, like considering this one.
Yeah.
Let's see what happened there. Yeah, so this is probably an important thing that they can learn. It's really hard when you use Fibonacci to know where you should trace your Fibonacci, because Fibonacci is a tool, as all the other tools that we use on the left. Tools are drawn by you, so you need to be careful how you draw that. And I'm talking about resistances, support, Fibonacci, channels, whatever you trace. It's something that you trace. It's different from an indicator, because indicator, you click on indicator, the indicator is there, so it's not something that you draw. So if I trace the Fibonacci like this, considering this wick, wicks, it's something that is important. It's not something that we can skip all the time, because the price really reached this level. So I can trace this Fibonacci, and I can trace another one that just doesn't consider this big wick. If we think about this was just FUD, so the real probably average of the price, it's starts from here at this point. And if we consider that, we have other bounces that can really be helpful to make a prediction, and at the same time can really give us a totally different study. In this case, we can see how the trend bounce on 50% here many times, and then it drops to 60%, bounce a few other times, and it breaks down again, bounce on 70. Remember, 70.70%, it's a nice Fibonacci that Elisa uses a lot, and maybe she can explain where did you get 77 from, like Forex? It's where they use a lot.
Yeah, I mean, a number of different books actually, and I think people understand the rules of Fibonacci. But I put them in the education channel. Fibonacci is there. It's a sequence of numbers. When you divide various sequence by the first number, by the third number, or vice versa, etc., you get the Fibonacci numbers, which are 61.8, 161.8, 361.8, and 38.2. 70.7 is the square root of 5. A lot of people use 50% as a inverted commas of Fibonacci, but it's not strictly a Fibonacci. It was used a lot by W.D. Gann, I believe, in his technical analysis. But all of these numbers, and what you can see on Vince's screen at the moment, are all made up of varying combinations of square roots or squares of the original Fibonacci numbers and 0.5. The square root of 0.5 that's used a lot in Forex, from what I can gather. And I actually had it mentioned to me originally by somebody in another group, and I started looking at it, and it just seems to work quite well. Maybe it's because crypto the 61 gets overshot quite regularly. Maybe it's how I draw my fibs, I'm not sure. But
Yeah.
either way, it works for me. And since I've mentioned it, Vince's noticed that it's quite seems to be quite
Yeah,
a
since
common.
in my personal trading, I never use 70/70, and I just added recently, since you talked about it, and yeah, I noticed that lots of bounces happened on that the Fibonacci, so it's very interesting because I didn't have the 70. Actually, I had it even 88.6 since the study of the harmonics. Because when we look at the harmonic patterns, 88.6, it's something that it's always there.
Mhm.
And so I added that Fibonacci too, and I noticed that when we break 78, even 88 can be a nice bounce. So if you guys want to add those Fibonacci, you just need to go on settings of the Fibonacci tool and just add, change some numbers here. You can add 0.886 and 0.707 and check them, and they will be on your chart. So by dropping this Fibonacci level to the second candles, and to be honest, I do this little adjustment on my chart every time the wick is usually that big. I even do that when I trace my extension. I don't go from the highest wick. I drop from this the second one, or where there is more resistance, and then I see if my Fibonacci bounce look good. So sometimes you have to adjust the Fibonacci to see where the trend is really bouncing to make a good study from it. Remember, those Fibonacci are really hard to use it sometimes, so you need to like practice with them, and then make your prediction at some point, because I had to like do many mistakes, many tests, many bad trades before to understand my own way. And everybody can use Fibonacci in different ways. Elisa can trace her extension different ways that I do, and we have been discussing it privately. What's better, what's not, and every single kind of strategy can be used for a different setup. So you guys gotta figure out sometimes your own way to see things, because we TA is pretty much, we consider it as art without the H, art. So you have to be
I
able
think
to see things. Sorry, yeah, go ahead.
I think it's worth mentioning confluence as well. And if people are unsure
Oh yeah,
about
yeah.
fib, so for example, on this Bitcoin chart, you could fib from the bottom left there, back at the bottom of that trend line on the 11th, right to the top. You can do the one that we've got in there already. You can do the original one Vince had. Quite often I'll do 3 or 4 on top of each other and
Mm-hmm.
look for areas where they have multiple fibs in the same place
Mm-hmm.
and also aligned with previous support and resistance. So you can see even on the fib that has there, that 70.7 aligns with whatever fib he's got drawn on the left, which he's just deleted.
Oh, yeah. So yeah, just make an example with this so it's easier. Uh, yeah. So you can trace different Fibonacci. So what Elisa is saying that we talked about the other day. So I can trace. Otherwise, people might not understand if I don't trace it. A Fibonacci extension, assuming that BTC might break here, and we want to know the targets. Of course, we can use Fibonacci extension, right? Fibonacci extensions, that is a tool that I explained in the tutorial, can be used by tracing the start of a spike to the top of this spike and then drop the tool to define correction, right? Which one was the chart that we were tracing the other day, that we were discussing the targets? Do you remember?
Lend.
Land. Oh yeah, land. Yeah, let's go on land because it's more boom. Okay, so we got some Fibonacci in here. Um, okay. We
So
were
you,
which one we were studying? The 034?
we were trying to figure out where 5 would be
With
at that
5
time.
would be okay. Okay, cool. So okay, I don't really want to cancel this. Let's see if I can open another one. But yeah, I don't want to really cancel the study here. Load another chart. I have a live stream here. Okay. So this is not a tour or trading view. If you guys know, you can actually have different layout. So I can have different, I have a Vince, I have live stream, I have dashboard, I have whatever. So now he opened me another trading view. Now if I go on land, it should be no drawing on it. There we go. See, so I can use another land chart with a different layout, and just don't screw up all my analysis that I did previously. So optimal trade entry. 1 second, everybody. So the for PA as well. Okay, let's just finish this example here, and then we see what question are they asking. So
just mentioned that the 70.7 is commonly used by ICT traders as
okay,
well.
nice. So the main idea, if you guys follow the free channel, was that land was making those 3 waves, right? Oh. And you probably might see them now, kind of like that. Of course, trades like that are not really perfect Elliott waves because the 1 is crossing the 4, but and you might correct me here probably. Some of the traders consider Elliott wave by the candle close. What do you like to trace when you consider Elliott? You like the candle close, or would you trace them from the wick?
I would trace the wicks, but my understanding of it is that that 4 and 1 can overlap by a wick. I think it would.
Okay,
it depends
okay.
on the time frame of trading, and the fact you've
Mhm.
got Heikin-Ashi candles as well, and is the wicks are obviously substantially
Oh yeah,
longer.
sorry. Oh, there you go. There you go.
So yeah, you can see it like 4 is only overlapping by that wick of number 1 if you did it on the wicks.
Yeah.
Um,
So yeah, if it was on the wick, yeah, the wick overlap, but not the candle. So in this case, it can be a good Elliott. So then what we did, we just trace a channel connecting those 2 wicks here. We can show them how we use the ray. But that's how we should really trace trend lines and support using the ray and not the trend line, because the ray is more precise. Using the ray with the magnet tool, the magnet just position your cursor on the very precise on the wick, and then you can just trace, select the other one. This is a log scale and doesn't change too much because we're just tracing a little part of the trend. And then what I traced was this low touched with this other one, this other low here. So we were around the number 4. So I just want to make this nice and so nobody can see that. Okay. So we were around number 4. The me and Lisa were trying to figure it out where the 5 can be, where the 5 can go if the 5 was gonna happen, right? So in this case, of course, we can use different Fibonacci extension strategies. Of course, it's always good to trace a nice Fibonacci retracement first, just to see the bounce, and in this case a Fibonacci retracement would have been from number 2 to number 3. So I trace number 2, I go to number 3, and in this case the bounce that we got, it's on 70. Actually it dropped to 78 just 1 week, and then more bounced on 70.70, as you guys can see. But again, this is already something that you can change, because I trace my my Fibonacci based on this week. But you know, can this week be considered as our Fibonacci highest point? Maybe not. Maybe you want to trace below, or just go even here when there is more support, more resistance, sorry. So in this case, the bounce will happen on 60%. So again, it's a matter of what you wanna see, but again, the bounce will happen on 60, and if we trace up, the bounce will happen on 70. So we have some kind of support, so there is some level that Fibonacci helps us with. So you just need to figure out your way. I guess you can either keep with a certain strategy and just use always that one that has been working for you in most cases. Otherwise, you have to adapt every chart and see what you can see from it. But if you adapt every chart on based on your bias, you say bias, that can be tricky, because you just then adapt your Fibonacci to what you want to see, and then you can really make some mistakes. What I like to do, I like to, especially on extension, I like to drop them to main resistances, because they will give me shorter targets, and I want to show you what I do here. So the most common way to trace the extension is, of course, tracing it from the lowest point of the spike. So if I trace, if I put Ekinashi, you guys can see this is the spike that we are analyzing right now, and this is the correction. So the correct way to use the extension tool is to trace the bottom of the spike, the top of the spike, and then drop the tool down to the lowest point of the correction. In this case, of course, this one. Okay, so let me remove magnet tool. So here to there to there. Right, that's my number 4. So in this case, the extension tool, what it tells me some targets, and look at this. I mean, the target was pretty much reached, which was 100% Fibonacci in this case, okay, by using the tool in this way, and this would have been a nice target. But remember, this is a pretty long target. I mean, because you can even position all your target on every single Fibonacci if you want. You can see 61% was reached, 70% was reached, and then of course the last target. Of course, 61%, it's another one, but by considering these extension tools traced by 0, 1, 2, or in this case 2, 3, 4, that's where our target was based, because the resistance was touching to at the level, this resistance we originally traced. Now, this is one way. What's the other way? So the other way was considering from here, Lisa, right? Considering the 0 from this way, or
no, I would do 0 to 3 to 4.
Okay, so let's leave this Fibonacci here, and the other way we could have traced this Fibonacci, of course, was from was from 0 here to 3 to 4. So there was another Fibonacci that we can trace. So from 0, 3, the base of the correction. So we have, in this case, 2 Fibonacci that we trace. And when Elisa was talking about confluences, that's how you say? Confluences. You have to just consider one number really match here, what level match. And we have 100 and 160 here as a good confluence, or 78 and 50 you can see behind the tree as another good confluence. So you can see those lines, they match. So in this case, if I trace 2 Fibonacci, our target will be where most of the line match. So in this case here, this would have been a nice target. 78.50 as a first target, because we have 78 and 50%, and then even 160% as another target, and we can see here has been reached. Remember, targets are never a specified price. It's always like a box, an area. Never. When we suggest a price in our bot, is not gonna reach that price. Be smart. They don't sell at that precise price. You might sell even a little bit before. Otherwise, if everybody follows the price, it's start to get a little bit a dump kind of. So this could be a target box, and in this case, they're smaller. This could be another target box. So remember this as an example. And then you can trace another million Fibonacci if you want. Another Fibonacci can be traced by 0, 1, 2 to know where your number 3 is. And as you can see, number 3 hit which extension? The 78, right? So if you trace 0, 1, 2, number 3 is right on 78. But remember, even 61 is another level, and 61 was hit, and the trend bounced, went to 78, and then closed candle at 61. So again, that's not a very easy tool to use, but for sure can help us figure out some targets if you practice a lot with it. This is the normal way. I have a different way to trace it, and my way is this one. Oh, you want to add anything here, Elisa?
No, that's fine. I think, well, other than like I was saying before, to also look at those points in conjunction with previous support and resistance.
And like you can see, you can trace all the Fibonacci that you want and leave it there. That's why my land chart here is all over the place. Like, you might not understand anything, but in my mind I remember how I trace those Fibonacci, so you can then review those Fibonacci. As you can see here, look, this 100% that I trace, tracing 0, 1, 2, it matches with 100% that I trace here, and 61%. So this target becomes even more how do you say, a better target, because there is this another confluence here of the Fibonacci that I traced before. So I suggest to leave Fibonacci there every time you trace it. You can just make it more clear if you don't want it on the way, and then you go with the confluences, and that's always a good strategy to use. My other way, it's a little bit different, considering again 0, 1, 2, 3, 4, and 5, let's say. What I do, let's go on the 1-day chart because it's more, cut some noise. What I do, instead of doing 0, 1, 2, check number 3, what I do, I just consider the correction. Why I do that? Because sometimes it's hard for me to know where the zeros start, right? In this chart, in this pattern, probably it's kind of easier. But an example, if I want to go on the 4-hour chart and I want to trace a 2, 3, 4, does 2 really start from here, or 2 start from here, or from here? Like, you sometimes don't know. So because of that, I may just consider the correction to know my number 3, which can be easier. In this case, I would click on 2, go on 1, click on 1, and drop down to 2. okay, and I expand my Fibonacci, my target will be around 161%. Now, this is a very good strategy that I use and most of the time works. We can see even number 4 to number 3 drop to 4, and again it's very close to my target. Remember, never use a defined price, but usually, you know, a box works. You know, here and here, those are the targets that probably you would have hit. And now, to make my targets even more reachable, what I do, I skip the high wicks. Okay, so if this wicks was really massive, what I do, I don't consider the wick as the top of my Fibonacci. I consider the second one here where I have more resistance. So I would do number 2 to this wick and drop down. So in this case, my target drops way below here. So it's a target can be reached, the odds to reach the targets are higher, of course, but you know, the reward are less than the previous one. And of course, you know, you understand why, because of course my Fibonacci is it's tighter here. And in this case, these two, if I consider the 4 and I drop my Fibonacci to the second wick here, my target will be a little bit lower, and I'm not sure, sorry, that's Elisa was gonna kill me there. It's more, you might hit the target for sure with better odds than having a targeted higher. Okay, so that's a pretty neat strategy that I personally use every time. And when it comes to Elliott waves, what I notice is that this in cryptocurrency, where you know I trade most of the time, the extension of the third wave is usually 261, and then the fifth one is usually 161%. Why? Because we know Elliott wave is usually the third wave from 2 to 3 is usually the longest one. I think we have seen that in ZRX. Let me go back and what is this? Oh, Coinbase. Oh yeah, they got Coinbase now. So very quick, because I charted this already in the seminar itself. But if I want to trace a Fibonacci of this Elliott here, 1, 2, 3, 4, and you know, let's say 5. This was the first wave. Then there was FOMO and arrived there. But let's check those waves for example. So with the normal tool, I would trace 0, 1, 2. Look at the target, boom, killed it. So in this example, this is the Elisa way. Let's go like that. The Elisa way worked pretty good. Okay, if I trace my way, which is 0, 1, drop to 2, as you guys can see, again 261 in this case worked as a target, and under 61 works too, giving you a shorter target. You see that? And in this case, the Elisa way would have give probably another target there, which was 100%. You guys can see that. So you know, both way works. You're just gonna see which one you prefer. Okay. And then again, let's see what this strategy did with the 034. So Elisa way, boom, boom, boom. Again, 161% reached and killed there. And in this case, we had a bounce on 78, not really on 100. Let's see my personal way that I do 4 to 3, drop to 4. In this case, I have my target on 261, and again, not under 61 was not reached precisely. So again, they both work, they just have different numbers. And then remember, you can leave those 1 to see bounces, okay? So one thing that I want to tell you guys, when I do this extension that I do from 4 to 3 and drop to 4, what is this pretty much? This is pretty much an inverted Fibonacci retracement. I don't really want to confuse you guys, but if I trace my extension, my retracement in the opposite way, you know, I trace my retracement from 0 to 1 to know how much number to retrace, right? So I can trace this Fibonacci retracement from 0 to 2 and have my extension. So that's the same thing I want to show you guys here. So I can use my retracement from 3 to 4, so in the opposite way, to have the extension that I do, right? So the extension is from 4 to 3, drop to 4, and I'm pretty much drawing the same thing, okay? I just use the extension tool so I don't get confused sometimes, because it's hard sometimes to trace those Fibonacci reverted and you might get confused. So because I don't want to get confused, I use extension in the way that I show you guys. Okay, so I think that's pretty clear and amazing strategy to use to find targets. Remember, you can use another million way to find your targets. Other ways, of course, are by using indicators. Oh, what is this mechanism? If you go on shorter targets here, a shorter time frame, you can go with the MACD crosses. You can go with RSI if it's oversold and overbought, sorry. And you can go with the trend lines too. So if I would trace a trend line that connects this high and this high, you guys can see I'm really close to my target here. Actually, that's was the target that really matches up with my trend line resistance there. Okay. Anyways, I'm talking too much. Let's see if anybody has any question. I think it was pretty good explanation here. Very helpful. Very cyber. Wicks are important. Yes, totally. Sometimes, you know, with the wicks, you know, the things that we struggle to understand sometimes is if it's a wick, it's a false breakout or not. That's, you know, something that sometimes we struggle with to trace our trend lines. And in this case, yes, this could be an amazing trend line because there are 3 perfect touches connecting the wicks, but sometimes it's not that easy, and we have a perfect example with Bitcoin, right? So this trend line might be, if I want to trace another trend line, this trend line might work because I can connect 3 candle closed, which is this one. I mean, I'm charting with the Kinashi, but you know, just for an example, I'm connecting 3 candle close, and those wicks can just be false breakout, and my trend line is really this one. So if I'm breaking here and I'm going over the resistance, is that a break or it's a false breakout? That's really an issue that I go over every time. What, you have anything to say, Elise, about this one? What you recommend?
It's quite subjective, isn't it?
Yeah,
I think.
for sure. Yeah, it's like you just sometimes you gotta see the average, where things are going, and make your assumption. Again, trading, it's not an 100% thing, especially trend lines and support. You know, we have them there, but don't count on them 100%, because you know there is false breakout, there are breakouts and retest, there are stop loss hunting. I mean, there's a massive things that can happen when a pattern breaks and the resistance breaks, and we need to be careful on that. That's why it's not easy most of the time to say, hey, ZRX broke resistance, buy it. you know, there are many things that we need to pay attention when that things happen, because it can just be a false breakout. And you know, if we set up a price on above the resistance, you need to know that even though it broke, it doesn't mean it's gonna keep going up. Most of the time, we wanna check if candles break out and stay above the break. So in this case, by using candlestick pattern, my trend line, it's wrong, and I would have adjusted to here, right? Because I have perfect retouch on candle close like that. So if we break and we close about this resistance line, that's more a positive indication of breaking resistance compared to, you know, this time frame here that is not really breaking, right? Then remember, closer you go, more things you can see, right? So in this case, no candle close above the resistance, and I don't consider the resistance as broken one. Okay. Okay, can you check ARN? So there is a request on ARN, and then yes, with BTC Max, alt wicks often occur to see liquidity. Yes. Yes, then the liquidity, it's for sure something that concern a lot the price action and ITC traders, because they work on that just based on liquidity and order blocks. So when a wicks it's very high, what really means it's something, you know, there was lots of liquidity at that point and has been rejected, and many people sold at that level. That's why, you know, we see those wicks dropping so much, and those are based mostly on horizontal resistance and support. Vlietju, it's so hard to say your name. Vli, I'll call you Vli. I guess you're more a price action trader from what I see from your questions.
The ICT comment seems likely.
ICT. I'm not a big ICT trader, so I don't really go by the order blocks, and I didn't really research a lot on it. We might have Armstrong have a nice tutorial one day for order blocks, but we can make it just a quick example of what an order block is. Elisa can help me here. So, which order block would you consider on this chart? Actually, do you like order blocks? I think you hate it, right?
I don't. Yeah, I'm not a fan.
Actually, this could be a big one to consider. So if we consider this massive red candle here as an order block, so lots of liquidity can be at that point. We can see the trend, and you know, this is like kind of tracing a support and resistance pretty much. So we can check the candles and see every time that the candles gets into this order block and gets rejected, that means, you know, lots of order has been triggered and the price dropped. Again here, try to like enter, and boom, went back down again, and it dropped. Now you reach here, look at this spike. It tries to goes in the order block, it reached that liquidity zone, and boom, drops all the way down. Again, now it tries to go in this liquidity, boom, drops again. Here tries another time and drop. So until we close inside or we break this order block, you know, we probably will keep dropping in this level, right? So it's a way to find some resistance and support. Now you can of course play around with different time frames. So this is the daily time frame. You know, if you go on 4 hours, 2 hours, 1 hour, there are different order blocks, as everything in trading, right? When we trade, we have to see indicators in every time frame. We have to see any other things in every time frame, so moving averages and all the other indicators, they change every time frame. So candles change too, so we need to consider and have a different approach. If you want to make a short trade, probably you're going to find order blocks in the short term and just consider very close candles, or you can just go on the daily chart and consider main order blocks and keep them there to of course make a better study at the end. Okay. What else? So what other question? Rene Arn. Let's see Arn what he's doing. Oh, this is my other chart. I have some stuff here. Let's see. So we made a call on Arn because, you know, we had this study here. Actually, this is a pretty cool study. It's a coin that me and Elisa have been fighting for. We had a cool setup at the bottom here, which was a mix between a flat top and a nice cap and handle that definitely broke, either if it was a flat top or if it was a cap and handle, or maybe it was both together.
Really not a cup and handle.
What do you say?
It's definitely not a cup and handle.
It's not definitely a cup and handle because the volume doesn't match, right?
Pretty much, or the price.
And you know, and you know, I can misinterpret, and everyone, you know, could call that as a cup and handle just because the pattern looks like a cup and handle, but it's not a cup and handle because the price doesn't really match up with it. And remember, every time we look at some patterns, volume is important because can identify the pattern itself, especially with the head and shoulder. In this case, I trace all I can see, and then, you know, you can make your consideration. Actually, there are other little pattern that we can see if we go closer. Probably this could be another flat top triangle here, right there, a small one, because we have some good support here and we have good resistance flat. So it broke it, and of course when it breaks, we start our Elliott count. Of course, we don't start right away. We see the first wave, then we see the third wave. Then from my third wave, I start to see if I can call an Elliott wave, if I can count an Elliott wave. So we've seen the drop happened to 70% as the second wave. As you can see here, the second wave dropped 70%. Then, you know, I trace another Fibonacci retracement, and these things retrace 70% too. So in this case, I start to really see another wave coming up from there. The wave started, reached this level, and then dropped, and that's where I made the call. I made the call on 1 hour. I cancel my risk reward. I had a risk reward thing there. It disappeared. Anyways, I made a call on 50% Fibonacci here. Why? Because the Ekinashi were getting smaller, finding a support on 50%. It would then be nice if you would have wait for a green candle based on maybe on the 8 chart, because I don't see any green here. So when probably Ekinashi turns green, something could happen there. But, you know, I placed my risk reward below 78, just because, you know, the pattern has been retracing more than 70%, so I didn't want to get stop out putting a stop loss just below 61, so that's why I went a little bit lower. And you know, let's see if this pattern can explode here. It's looking good right now. It's making maybe a falling wedge or some kind of pattern here. Let's see if we can connect some wicks. This one, and can not connect all three. It's a pattern for all wicks for sure.
Trend lines don't work terribly well on Fibonacci candles, do they?
Yeah, the wicks are sometimes really the wicks are the same. The body candles changes.
Oh, okay. I thought the wicks were off as well.
No, they should be the same if I'm not wrong. Like right now they match on the support, on the resistance. Let's see. No, the resistance they match too. So probably the candle close is for sure totally different.
Okay.
Yeah, I didn't know that. Yeah, that's good that we made an example off of it. And you know, I can trace other candles, but you know, the pattern is full of wicks. So we can consider that as a falling wedge that broke. I'm not sure. Not really perfect. Many wicks here that we can consider. I don't know if I can trace this one. Let's go closer. Actually, let's go in our chart here. That's very clear. We can trace some fresh lines. This is a good thing. Sometimes go fresh and see from the beginning, and your chart you can see new things. Because your chart that you traced before can be highly biased from the lines that you traced before. So in this case, I can trace. Here we go. Those are nice resistance and support. Elisa would like that. This is Elisa style.
I'd like it more if the day candle was closed, but
what do you say?
I'd like it more if the daily candle, the current candle, was closed.
Yeah. No, I traced those two, 1 and 2. Here and here. Now there is a so this is not closing yet, so we don't count this as a bounce, but that might happen. So if this candle close, we will have 3 touch on this support, which would make it a very strong, a very good trend line. So right now we have this. It's a symmetrical triangle. May he still break either up or down. So it's looking great on the 1 day. Let's see some indicators. Okay, let's remove all the mess here. MA Bollinger Band is very high on the daily, so that is not really promising. Let's remove Fibonacci for now. And MACD is actually not the best on the daily. Not the best on the daily, but you know, we know it's a lag indicator, so it's very high for sure, which can be scary, but we need to go look closer to see if, you know, this can actually just cross and just keep his way up. So it's not that scary as it might look right now. RSI just, you know, going sideways here.
It's also that the candle hasn't closed, therefore the MACD isn't complete.
Yeah. You know, the daily for sure gives us a very big, you know, idea what's going on. For sure we have some bearish sign, which is, you know, the Bollinger Band that are oversold here and might keep dropping there. But again, Bollinger Band indicator, it's tricky too. This is a perfect example here. Like it went out right here, oversold, overbought. Would you call Bollinger Band overbought and oversold too?
I wouldn't really use that terminology. We just
Well,
say it's extremely volatile.
yeah, okay. So you know, you went out the Bollinger Bands, and you can see we might have thought about selling here, but kept when it going up with a massive candle actually. So when it's over the bands, doesn't really mean we have to sell, you know, but for sure can alarm you a little bit, right? So in this case, it might happen again. We're over the Bollinger Bands, and it's because we are waiting for the third wave. The third wave might really arrive there, so we cannot really say this by the 1-day chart. So let's go back and see 12 hours. See, 12 hours totally changes. You can see the cross already happened. It's dropping, and we might see a cross, a bullish cross here happening. RSI still not great. Of course, if more we go back, the indicators will become more bullish because we are in more a short term. You guys can see here MACD crosses, and it's going up. It might go up here. So there are some possibility. Actually, here on the 4-hour chart, we have a nice combination of candles. Then you know this is a what is that? Double spinning top. Can you call that almost? This could be a morning star kind of pattern, right? If this candle was a little bit lower, would be a morning star pattern. Would you call that as a morning star?
Yeah, I think that's the bullish engulfing is probably the more important part.
So yeah, this is making nice bounce on the support here. So you retested, giving us the touch that we wanted based on the 4-hour chart, right? So we have 1, 2, 3 touches, made a nice spinning top, which usually can be counted as a reversal candle when it comes from when it's at the bottom, and it's pumping this candle. So far looks good. We were going to trade some trend lines in the small pattern, but again, it's not that easy. I see too many wicks. So which one are the real one? I don't know. Same story here. A false breakout here. Maybe this is breaking. I consider this 1, 2, 3, 4, 5. That's 5 touches. So I connect 5 touches. Would you count that as a good resistance, Elisa?
5 touches for sure.
And you know, we count this as a false breakout. And 5 touches. This is another false breakout. And now is definitely breaking the resistance that we traced. So counting on what we traced, it looks bullish. So that's why, you know, I say, you know, tools that you use, they need to be traced properly, because, you know, if you trace something like this, you might say, oh, we're still inside. And then if you trace something like that, you're like, okay, I'm bullish. So be careful when you trace trend lines, because, you know, you need to figure this out. So practice will make things better for you. ARM is a pump and dump. After big ups, very tricky. Don't become a bag holder. That's what Blee says. Well, pump and dump. Do you think is a pump and dump?
No, not even close.
For sure, some group might pump it, but this thing's really bullish and keeps going up. So maybe it was a kind of a pump and dump in many cases, but doesn't really look a pump and dump coin at the moment, in my opinion.
No, I completely agree. I think firstly, there's far too much volume for it to be a pump and dump coin. You're talking the traditional pump and dump coins are those that are currently on Bittrex and were previously on Binance back in the day before it got volume to it, that were what's the word, touted amongst groups and pumped and then had their members dump on them. And I don't think Aaron's ever been that coin. I actually bought Aaron at ICO.
Yeah,
So
look
I
how
would really,
massive is the volume on ARN. So you don't really see
yeah,
this massive volume every single day, and then a massive accumulation here doesn't look a pump and dump accumulation compared to other coins where you just see like a big spikes. They usually have pre-pumps or accumulation. Then you see the pump and drop like crazy. But you know, sometimes those pump and dump group take advantage of those coin just because they want to kind of hide the pump and dump behind it. So maybe this candle here, it was a pump and dump. I don't know if it was announced in any channel. Not sure about that, but if it was, remember, even though it was announced, maybe in the overall chart idea was not a pump and dump, but it just was. They were trying to hide that fact that they pump and dump the coin, and the coin can still go up. Okay, like very good project can be pump and
yeah,
dumped.
you can see the building volume and the building price before that point, and no, pump and dump groups don't do that. Like I said, that's too, the volume is too big, and that's again large traders who are making that kind of movement. What I will say though is that part of the reason I called it in the first place was that there's an upcoming airdrop. So arguably, you can say that's a sort of slightly a pump and dump scenario because people do tend to buy an airdrop and then dump it before the airdrop or after the airdrop, depending on whether they're going to get it and whether Bitfinance supports it and all those sorts of things. So that's coming up in the 2 to 3 weeks, I believe. So I need to actually have a look into it and see.
Like yeah, it's very tricky, of
Whether
course,
they're going to
to understand. What
something,
about these other coin, bread?
to me
Bread is
go
crazy.
that high. But even bread, like, yeah, it's spiky. People are doing ridiculous market buys going on in there.
What happened here? Do you see this volume here?
Yeah, that I suspect is Binance manipulation,
What
and there's definitely
the
things going
fuck?
on Binance. If you look at links, you
Bread
see the
spikes are
same.
insane.
Mm.
Are insane. So this coin, uh, we can see it as a very good coin to make a quick profit. So if you buy, like we have been doing with ARC, buy a support, sell, set your sell order already at top, and you can make good profit. How much are those spikes? Those spikes are pretty strong, pretty high, 35-40%. And they're stopping constantly at this level where we have our previous low. So this is a very good resistance level. We broke once, and then coins keep closing below the resistance. So now we are kind of creating this upward channel or trend line. So I mean, I would like to buy a bag of bread, to be honest, just to catch some crazy stuff that might happen here. But the only thing I'm scared about is this pattern that might break down here, as I always happen when I call every coin. If we consider the candle close and all those spikes that are happening here, I could even trace a channel there, an upward channel. What would you do here, Elisa? Would you trace this upward channel, or would you trace a flat top?
No, that's a flat top.
It's a flat top. Okay. So if we leave both
I
of
would go
them,
down
eh?
time frames. I think you're looking at the day chart for me is too it's too broad. I would always look at the 4 hour to try and see more clearly where those wicks are or where the closes are.
So, anyways, if I go to show you how I try to look for waves, I just start from the main chart just to see if I can see some waves. Then I go on 4 hours, and Elisa works on 1 hour mostly too, right? That's your favorite, the 1 hour.
Just work my way down. I start, I same as you start on the day, then I mostly probably on the 4 hour, and then 1 hour and lower I look for entries.
So this is very hard to see waves here, because wicks are all over the place. So if I really wanted to trade some, just to see if what might happen, a wave, just considering the candle close, might be something like that. But of course, it just isn't. Those are not Elliott waves. Could be different patterns, different waves, and but again, it's really guessing right now because the wicks are massively. So where to trace our Fibonacci here, we don't have no clue because it's all over the place. So sometimes I trace my waves and I see if an ABC correction or some kind of a bounce around 50% might happen. In this case, we had like a little one there. That's not 50%, but almost. But again, this could be a risky trade. But if you guys want, this could be a trade in this situation. I would put probably just a stop loss to give me a little bit of space below 50% here. Elisa probably would put her stop loss right here, right?
Well, like I always say to you, I trade whatever pattern, whatever I'm trading. So in that case, if I was trading an ascending triangle, I put my stop loss right up next to the ascending triangle.
Yeah.
Because
So
if that breaks, that to me is the trade breaking.
So this is the two strategies that me and Elisa might use different. So Elisa is trading. She's trading in this example, this triangle, right? So for her, if we break below this triangle, the trade it's over. So of course she wants to get stopped out as soon as the triangle breaks down. In this case, the stop loss will be very tight. Let's see, 3% here. And if we go back, if the trade is positive and we reach this level, she will make 2.4 risk reward ratio. So she's risking 1% here to make 2.5%. So this is a more rewarding trade, but remember, higher your risk, higher is your reward there. So and you guys know that to make your reward higher, you have to have a tighter stop loss. So that will be her setup. What's good about this setup is the reward. What's bad about this setup is that you might get hit quicker, right? So you might lose the 1% of your risk quicker than a larger stop loss. My way to be more of to consider more the volatility, or let's say a false breakout, in this scenario, I would put my stop loss a little bit lower, considering this lower low here. And because I'm really already, sometimes I just even go even below the 50% here, just in case the pattern just makes a false breakout, and this false breakout gets here and then boom, keeps going up. In this case, I will be safe. But remember, my reward are really small right now, because as you can see here, I have a 1-to-1 risk reward if I reach my resistance. So in this case, I'm risking 1% to make 1%. While Elisa's strategy, if she hits that trade, she would have made 3 times a risk. Okay, so that's something you want to know, and you want to find your own strategy in order to make whatever you feel like. Do you really want to get hit, or you really want to get hit, maybe enter below, enter at 50%? So that's what you probably do, Elisa, right? If you get hit, you say, well, I open another trade if I have to, right?
Well, no, I would reevaluate the trade. And like I've always said to you, I don't think you should not be placing your stop loss according to how much you want to risk of your portfolio in dollars. You place your stop loss according to the trade you're taking. So in this case, I said I would put mine right under the ascending triangle, because that would be what I would be trading in this situation, for example. I might add a little bit if there was a support wick nearby. So, I might sort of go between your example and my example, but that to me is what I'm trading. So if that
Yeah,
trade,
yeah.
so to me, again, it's the order of events. Like
Mm-hmm.
you design your trade, you design where your entry, your stop, and your take profit is. You then work out what the risk reward will be on that scenario. Then you decide whether to take it or not. And you use the position calculator to decide to figure out what position size you're allowed for that trade. Like that is the order, and that shouldn't be changed.
So
That's strict.
how do you because we live in a very volatile market, and especially now coins, and especially bread, it's full of wicks, right? Would you, and this is a question I want to ask you, like, why wouldn't you drop this stop loss, let's say here, where this low here is, just considering that a false breakout might happen? Because in this case we're still risking 1%, right? It doesn't matter where we put the stop loss, we're risking 1%. So why don't use a stop loss that's below this low,
Because that's
considering it?
you are trading the ascending triangle. The ascending triangle is a market psychology. You can see in there that the green candle, Jonathan, you probably need to look at normal candles rather than Heikin Ashi, but I'd be looking at the green candles being stronger than the red candles, the green candles being bigger, and the red candles being smaller, and then you're looking at that bottom line as a strong trend line pushing price action off it, regardless of weight.
So I'm just discussing this with you because that I'm really pissed about that bot call that I made. You know what happened there? Where is bot? This is one day. Yeah. So in this,
you buy back in, like you're saying.
yeah,
So
yeah.
in a situation like this, if it's not an ascending triangle, or you're not trading a trend line or a diagonal of some sort, then yes, of course, the trade might, maybe it would. So yeah, I think I see where you've, it's come off the trend line, it's gone down below, it's found, maybe, and maybe you develop a new trade that incorporates that fib.
Well, depends. Maybe it depends. How much you're really looking at the coin too. Probably. If you're a daily trader, you're constantly looking at the chart, trying to make those trades. Maybe it's good to take a very tight stop loss because you can re-enter the trade whenever you want, and by putting a tight stop loss, your risk reward it's very high, right? So by considering this situation, probably it's good to put a tight stop loss because in this case, and this is what happened with BAT. I traced this this triangle here, and if you are a daily trade and you look at the chart every second, probably the best way to trade this one would have been place a buy. Of course, I mean, a breakout is not suggested. Sometimes on the retest is even better. But what we did on this trade was placing a buy on the breakout, and then we put a stop loss just below. In this case, the coin broke, hit our stop loss, and then did all this mess. This probably was caused by BTC drop too, and then boom, 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 boom. I mean, he made a full Elliott wave pattern here. So in this case,
to me, that's a new trade.
Yes,
I think the original trade was an ascending triangle. It broke out, broke down. You can then at that point make a judgment as to whether it's Bitcoin or whether you think that still has the strength. In this case, we thought it was going to be on Coinbase, so yeah, we can say it has the strength. So when Bitcoin stopped messing around, you then create your new trade off it. But the reality is, if you were at the point in time at the end of that green the long box that you just drew, you wouldn't think that was a good trade to get into because you would think that was an indecisive break of the ascending triangle, and you should be getting out of that trade.
Yeah.
So yeah,
totally
you're back in hindsight because you got stopped out on it.
Yeah. No, totally. So I'm just trying to see different scenarios here, and for sure, again, this was another trade, and probably if you get stopped out here, you want to re-enter, but because you think things are still looking great, and that was just BTC being a bitch. uh, what of course would have done, and this is hard sometimes, because when you look at many coins, sometimes you might lose opportunities because there are just too many coins you're looking at, and you might skip one, and this was a good one that I missed personally. And what I would have done, I would have traced a Fibonacci from here, from the bottom to the top, and you guys can see this bounce hit perfectly on 50%. So that would have been another good entry for BOT. But again, let's now take in consideration the fact that you want to be long on BAT. You want to open a nice, good trade and be safe, and just buy BAT and don't risk to get hit, and of course to make not lots of percentage as you would do the tight stop loss. So this is something that I'm gonna ask you. Would you would you, let's say, if I'm here, right? I don't know anything about what's gonna happen here. I don't know anything about this trade. And I just wanna open a trade for a long term, or mid-term, or whatever. I don't wanna get hit. Would you place a buy maybe on the support or on the breakout or whatever we want, and put a stop loss below 50%, just where this low here is, and just let the coin have a more breathing thing?
Breathing space is the
Breathing
term.
space, breathing space.
I think it's a personal decision, to be honest. I think probably in the light of what Bitcoin does, then yeah, if you want to be an investor, I think it's a different situation. For a trader, no, it's not like what I said. Like if you're a trader,
perfect.
Looking at least a few times a week or more, you would just get back in the trade if you wanted to get back in the trade. If you're an investor, yeah, it's a different situation. God, you can buy without even putting a stop loss.
Perfect.
So,
yeah, that's what I want to hear. So those are the two different. What the hell? Why is there a triangle? Those are the different situations you want to look at, right? And this is a perfect example of what kind of trader are you? Are you short term? Are you a scalper? How much risk reward you want to gain? Because in the Elisa way, if she bought again a new trade, and she would have bought a 50% here, let's say, putting a stop loss very, very tight and let the coin ride, she would have made 18 times risk reward. So that's massive. So with the 1% risk, so 1% risk of your total portfolio, you would have increased your portfolio by 18%. So that's massive, right? And of course, that's something that a daily trader would do, because he's looking at the chart on a daily basis. But if you're an investor, you want to buy BAT but still be safe in case of bearish move of BTC happens. You want to be safe. You want to still put a stop loss probably, just to be safe, just not to lose your money and just risk 1% of portfolio. In that case, you can put a stop loss of 15%, but remember, your reward will be way less. In this case, if we reach there, your risk reward will be 2.7. Okay. In this case, though, being an investor, probably you put way more money than a trader, right? What do you think there? So, if you're an investor, probably you put a chunk of money here, not just just a position size as a trader would do. Maybe you put a big.
I think, no, it's beside the point. I mean, you might risk more of your portfolio. So whereas as a trader, you would only risk typically 1 to 2% per trade. As an investor, maybe you would go a bit higher than that. But I don't think it's really relevant.
Yeah, you're right. You're right.
In dollar terms.
Okay.
I think it's worth bringing up the graph. Your win ratio. To break even. Do you have that graph easily available?
Let me try, because I'm screaming.
You're in time. I guess the point is you're implying that I'm going to get stopped out a lot, which is true.
Yeah. Yeah.
If I'm taking trades that are, for example, like it would be useful having the graph to be able to compare. But if I'm taking trades that are 5 to 1, I might get stopped out a lot. But to break even, I have to win way fewer trades.
Yes, I have a chart. Let me see if I can try.
2 to 1 trades.
Oh, here.
You might get stopped out way less often, but you need to win a lot more of those to break even. So I think
this is the little chart here. Do you see that?
Yeah. If so, your trades of 2 to 1, say in that extreme example you gave, you know, for BAT, you've got to win 33% of your trades to break even. In the kind of trades I'm taking, when you're looking at 10 to 1 or 5 to 1, those rows underneath, say 5 to 1, I've only got to win 17% of my trades to break even.
Yeah.
So that means any more than 17% of my trades, so what's that, like 1 in 6 or thereabouts, I'm in profit.
Yeah. What would you say it's your average risk reward?
My average risk reward, it's really variable at the moment. Because day trading, I'm looking at 2 to 1 or 1 to 1. And swing trades, obviously, a lot more. But for me, I'd always rather go tight on stop and go back in.
Yeah, yeah.
Once the trades, you know, but I say it's not necessarily tight on stop. It's just it would only be tight if you were going in like in that ascending triangle scenario. If you're going in right on the triangle line, you know, which typically you aren't. You're going in somewhere in the middle of the triangle. So it's not quite so tight, but yeah, it's tight to the trend line.
Yeah, I mean, this is so important because I mean, again, it all depends how much time someone has too, right? And if you want to put very short stop loss, you have to accept the fact that there can be lots of loser trades. That's just normal. And this is a perfect sample. I mean, if you try your trades all on one risk to get 3 reward, the break-even win rate is 25%. What this means is that out of 4 trades, you can lose 3 and win 1 in order to break even. So that's very important to know because I mean that's a pretty good losing rate. Like you lose 3 and just you need to win 1 to break even. So if you start to make better trade, you know, better trade than losing trade, like winning trade than losing trade, of course you're gonna be automatically in profit because this risk reward and in profit. And you know, we had an example in our bot. Remember, most of the calls usually can get stopped out, and that's not, of course, something we have to be upset of. Of course, you know, our emotions are tough to control sometimes. You know, we see a losing trade and we're like, oh my god, this is the bad. But you know, that's just trading. Those are the odds. We made an example we made the lunary, whatever you say. We hit a profit there of 20, and the coin is up 20% now. But it doesn't matter that it's up 20%. It matters that it's up 3.5 risk reward. So with just one trade, we might end up with 4R, and we made up with 4 trade that we got stopped out. So that's very easy to counter. So every time you hit a stop loss, try to see that as you know what, I got stopped out, good, I didn't lose money. That's how you should see the stop loss, because your stop loss save your ass. That's pretty much what it does. And stop loss is important in the long run, because you're not gonna get win trade every single time. That's especially in this fucking market that is terribly manipulated and whatever, you're gonna have losing trade. Remember, if you get stopped out at a 5% profit, in order to make that trade back up, you just need probably another 5%, and that was how's the thing called, like win percentage to get back, or how can I say it? You know, that chart that shows the percentages. to come back to like 50% drop equals to 100% in profit, right?
Yeah, you've got a 50% drop would be equivalent to a 200% rise if you wanted to get back to.
How can I find that chart? What can I type in?
I've got no idea.
Percentage profit loss.
It said it there. Percentage gains come back from a loss.
Yeah, percentage gain to back. Oh, I see. I already typed that in. Here you go. So this is very important. This is massive important. Like if you lose 5%, you need to then gain 5% in order to 5.3% to get back to where you were. But if you lose a 50% on a coin, you need 100% in order to come back. That's a lot, right? That's why we need to get stopped out pretty quick, because then we just need a small percentage to come back and make up for that trade, right? Even if we use a strategy of a dollar average, so we drop 10%, then we want to actually buy more coins after that 10% drop. In order to go back up, then we just will need 11% and make our average in order to calculate our profit loss. When if we drop 50%, you need 100%, and then over and over. BTC drop about 75%, 70%. So in order to go to all-time high, the coin need to go up 233%, 300%. So that's very important. And I can make a very quick example on BTC here. Just everyone understand this pretty clear. I guess everyone is clear. This is clear. This is math, but some people might never notice this. If a coin can crash, I don't know if it can crash 100%, but 99% it can. But it will never crash more than 100%, because that's just a math. Crash here, 70% said, though I keep going down, it will never reach 100, because it can keep dropping over and over again. I think it can drop to 0. Can it happen? Go to 100% where there's no more money, right? I guess that will be the 100%.
Yeah.
But BTC dropped 70%. Now if I trace another take profit percentage gain from where it is right now to all-time high, you can see that the coin needs to go 250% in order to go back up. So that really matters when you want to hold the coin or you want to sell when you're all-time high. What is suggested to do? Do you really want to hold the coin or you want to buy back lower? Well, probably you want to sell at the bottom so you don't drop 80% and then you buy back here and you make 250% off of that coin. But if you hold, you just wait, then when the coin comes back up here, you're still at the beginning when you bought it, right? So figure that out. And there was a question actually on the questionnaire that I really I forgot to answer. And that was from, I don't remember who, but the question was, at this time in the market, when we have bought lots of coins and we've been holding that from all-time high, what's a good strategy to do now? Is to sell your coins or to hold in loss and just wait for the bull run? So that's a good question that everybody asks. I will ask you first, and then I will give you my my take on it.
I think if you've held this long, it's foolish to sell. But what ideally you should be doing is, if you can put more capital in, is dollar cost average. And that's what I've been doing. So I had a lot of coins I was holding from, luckily I didn't buy the top in January. I bought some retracements and I bought some stuff before back in December. But then unfortunately I started working in January and I thought, oh, how far down can it go? Apparently quite a lot. So I'm still holding a bunch of stuff from back then. Luckily not huge amounts of money in, again, which is the other reason I didn't really mind holding that much. But what I've realized when you do the maths, that if I had something and it's gone down 90%, if I then buy double, it really doesn't, like, I can't sort of explain the maths now, but it really doesn't have to move very far up for me to get out of it at break even. So that's what I've been doing over the last few days, and I actively don't call the coins that I'm doing that in, because I don't want to bias the group. But Salt for me, BQX, I'm trying to think, MDA, ironically.
Uh-huh.
That was just
Yeah, of course,
uh,
that's very interesting. That's the reality of the thing. Like this is, open, the one we were charting. It dropped 98%, 96%. So, if what do you say? Sorry, you cut it off. Oh, I cannot hear you now. Oh, hello. I cannot hear you now. Well, I wait until I hear you. I keep talking about this for now. Um, so open. This is the coin that one of the members suggested. Dropped 96%. So let's say you bought it. You bought 1K. Say 1K. Around here. Oh, the hell is? Anyways, I don't know why it doesn't make me. Well, this is coin signal, that trade. It's really, really bad website. No, it's not. Let me find another coin that dumped so hard. Neo, my favorite coin. So let's say we got Neo, right? Still cannot hear you, Elisa. I don't know what happened. Must be the connection. Price. Let's see how much Neo dropped. So Neo dropped 84%, right? If I bought $1,000 here, this $1,000 after 84% drop be worth $50, right? So we're so low, it's not really worth to sell the bag when you are this low. Okay, I hear you now.
I was testing.
Oh, sorry, I hear you now.
Yeah, sorry, I think my internet went down weirdly.
Yeah, okay.
For a little bit.
So it's not really worth to sell now, because sure, things can really drop more, and at those levels, can drop another. How much can drop? Really, 30%, and you're gonna lose what, $30. So it's not really worth at this time in the market if you've been holding from all-time high to sell your stuff. What it's a good strategy to do, as Elisa said, it's to buy more. So if you have some more money into it, if you want to buy, you were saying, Lisa, double, let's say. So double, you say double then your start, or double of your holding? Much is worth right now?
No, double your the position size.
So at 2,000.
No, your position size in that's why I said it's kind of hard to explain the maths.
Okay.
In units, so say you bought 500 Neos.
Okay.
You would buy another 500 Neos at this price.
Okay, so not the double, it's the same amount?
Potentially, or yeah, sorry, the same amount again.
Okay. Well, well, in this case, they means under $50, right? Pretty much, yeah. Because if you bought $1,000 of Neo and then this that coin dropped to under 50, you buy under 50, I guess. They're much they're worth at the moment.
No,
No?
no, I don't think so.
Oh yeah, no, because the price really changes. Yeah, never mind. Anyways, if you buy the same amount of Neos, um, just to make an example in dollar, let's say that amount of Neo it's worth how much? Let's make an example. $50, whatever. I just need to go back up to 200%. In this case, this is pretty high right there. So half of it. Great example. Let's say I put $100, right? Let's make it easier. I just need to go 100% up. So here, in order to make to go to $1,000, right? So my $100 will be worth here what $1,000, and then my 150 that I had, because I'm still holding that coin, will be worth 1,500 if I reach sorry, $300 there. We'll have $300 here. Oh no. No, that 100 here will be worth 200 here, right? Why did I say 1,000?
I don't know how, but I think it's worth maybe just doing this as a separate. We can do a little write-up.
Yeah, we need
for
to
the
do with the
channel.
neos, because doing in dollars is not really gonna match up.
Yeah, it complicates things.
100%, 200%, 300%. Yeah, we need to count in the value of the coin. So if we do in dollars, not really gotta matter too much. But if we count on like if you have neos, 5,000 neos, and then here you still have 5,000 neos, and of course they will be worth less. And then we buy 5,000 neo here, then things kind of change when you go up. But you buy low and you sell after 100 200%, so value might double up, triple up, and to all-time high there will go up 5 times your buy-in at the level. Yeah, we cannot do that with the dollar value, so my bad. Okay. What else? What's going on in the chat there? Sound also not great. Also lagging on my side. Yeah, I mean the connection on my side is good.
You haven't got to hear yourself.
What?
Yeah, how can you compare?
I don't know. I know I have a pretty good internet. Or maybe, I mean, I don't know, maybe the settings from OBS. I watch like 1,000 of tutorials to try to make it the live stream fluid. Yeah, if you guys we are lagging a little bit, sorry, but the video will be streamed, will be stay online, so you guys will be able to watch it. I think they are seeing like a reload on YouTube. Anyways, we talked for 2 hours. That's a lot.
Yeah, I like the YouTube connection. Very, very.
Yeah. I cannot hear you very well with the microphones, so that might be another issue too. Your voice sounds very clear. Elisa is less. Yeah, it's the connection, because I stream directly from my microphone. Elisa, she is in Australia on Hangout, so it's a little bit different. We'll try to figure out a better way. Maybe next time with the Zoom might be a little bit better. there was an option that we were exploring for next live streams, or I'm gonna do more research on OBS and YouTube at the same time. Anyways, any other questions? Otherwise, we can close it here. We're talking for 2 hours. I think it was pretty good seminar.
Can you hear me?
Yes.
There was one question in the seminar channel.
Oh.
Let me find it. One of the guys who couldn't attend asked. It was about I can't find it right now.
Hope
but
you guys have
basically
a
about
blast.
what strategy you use if you're buying Bitcoin to buy an alt. What strategy do you use if Bitcoin then starts going down? Obviously, then it may go up, but you might lose money in US dollars. And how would you deal with that?
Oh, I'm reading right now. Yeah. Sure, if read the agenda, how to better manage BTC holdings. Okay. I find myself buying BTC the market price and I want to jump in a trade idea. Then BTC goes down while on a trend. Hedging. Well, then depends, of course. I guess what kind of trader are you? Are you really focusing on making BTC in the long run, or are you focusing on your USD value? That, I guess, that's the main concern. Elisa here, I think she tries to accumulate as many BTs as she can, because if we are in this for BTC to be 1 million one day, of course you want to try to accumulate as many BTC as you want, as many Satoshis as you want. So in that case, it doesn't really matter USD value at that point, if you see in that kind of mentality, right? On the other side, we live in a world where we do still everything with USD. So USD can be important in, when we evaluate our portfolio. I personally consider USD as important because, if I'm in this full time, so USD, it's important for me. But if you, let's say, just work a part of your money, and you have other jobs, you have other things, and your USD at the moment really doesn't matter, and you are here for the long run, well, probably BTC is what you want to look at. But if you are really trading on a daily basis to make a living right now, you need USD. I guess you have to consider even trading in USD market in order to increase your USD portfolio, I guess. What's your take, Elisa?
Yeah, pretty much what you said. I mean, for me, just for ease, I trade in Bitcoin. It makes my life a lot easier. I work on the principle that Bitcoin will ultimately be going up, and that I can make greater gains in Bitcoin than Bitcoin can lose in the interim. So,
more easy, but I stressful.
Sorry?
More easy, but stressful.
Stressful? Why?
Like, because, we really need to, if someone is holding BTC, and, you're trading BTC, of course, you need to be really, really confident about the long run, the long BTC, the future of BTC, right? Because if this thing crashes, then I hope it doesn't. Of course, I'm not towards that mentality. Otherwise, I won't be leaving my job for cryptocurrency. But being a safe kind of trader or personality on my own, I always consider every single scenario, and that's why I try to keep 40% in 50% in USD value all the time, just to be safe. And we even know that bearish market can be long, so a good strategy, if you're starting now to do trading, a good strategy would be to keep an amount that you can survive for a long run sometimes, in case something really bad happens. You need to take care of your life, right? So if you're a full-time traders, you should never be all in, because and if that's your only income, well, you need to find strategy, because if we really gonna drop to 3K and things really gonna turn bad, you need to know that, and you need to find strategy that can save your ass, and make you wait for 1 year, 2 year, and still have some money that can save you, right? um I guess that's my view.
Well, I think that, yeah, there's a different situation if you're if you're actually taking income out of it. Of
Right.
course, that's completely different. But I also think for the guy who asked the question, like it sounded like he was transferring from US dollars to Bitcoin to the alt, back to BTC, back to US dollars, like in a very short space of time. And
Mm.
yes, there is a slim chance that we're going to dive from the 6.5 grand we are now to 3 grand, but it's very unlikely to happen overnight.
Yeah.
So it's possible that he might lose Bitcoin's fluctuating
Oh,
two,
I
three,
know.
four
Yeah, 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 yeah.
I think in that period of time that he's holding that alt. So
Yeah.
I think there's a timing issue to it as well. Like, yes, you might lose 1 or 2%, but if you're buying an alt which you hope is going to go up 10, 20,
Yeah.
30%, then it's a different situation. Or you're going to make way more than that loss. That would be my perspective of it.
Yeah, I know what it means. That, like, I've been in this situation too, and I think one strategy that made me like be more relaxed in that situation. Let's say I have 100% in USD or USDT, and you really want to buy BTC in order to trade, and you want to buy a 20% of your holding for BTC. So what I would do, you just buy BTC right now, that is 6 4 whatever, and you just don't complain. You just leave it there, and if it's gonna drop 2%, it's gonna go up 3%, it's gonna go up 2%. Like, it's not gonna change your life. So I would just buy an amount of BTC to trade, leave it there, and then if it drops to 20%, it's not gonna be a massive loss that you have in your portfolio, because if you use just 10% of your portfolio in BTC and BTC drops 20%, you're just gonna lose 2%. So, and BTC to drop 20%, it needs to go to how much? 50, 45, I guess. So it's a good strategy to buy, and just don't be worried too much about what BTC is gonna do, and just do your trade. Because if you're trading altcoins with that position, you're probably gonna make some money, right? So that will cut any BTC fluctuation at the end. And then in this case, if you want to drop 20%, that's 5K, right? So it's not likely that's gonna happen, but for sure there is some risk involved, but there is risk in everything you do. So what I suggest to run, just buy an amount of BTC that can be like 10% of your portfolio, and just leave it there and do your trade, and don't panic about it. That's it. All right. So actually you should look to USD, but within this market it's not that easy. No, I think it was answering about USD BTC, like BTC or USD. Anyways, okay, I think we're done. We did a good QA. I liked it. I learned a lot
Yeah.
too, and hopefully everybody learned a lot too. Appreciate whoever was live here and didn't make this live stream boring as the other time. Thank you, Elisa. Appreciate, and we'll talk to you guys soon. All right. If you want, you can put a like. Maybe we or subscribe to our channel. If you didn't, I guess everyone did it. But put a like, and maybe we will stream this to our free community so they can learn too a bit. Okay. Thank you so much, and I will talk to you guys later. Bye, Lisa.
Thanks, guys. Bye.